Good morning and welcome to this Wednesday, June 16th, 2021 edition of Trading Places live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, we had our great session last night on Max Pain. We do that once a month, and June options expire this Friday. So we have 3 days heading into options expiration. And wouldn't you know it, we have a Fed meeting that will end today at 2 p.m. with a policy statement, likely with the Fed saying they're going to stick to their course. I think anything else probably would be a little bit more of a, I think it'd probably be a little bit more of a surprise than, if they just stay the course. I think most everyone is expecting the Fed to stay the course. And so that's what I would be looking for as we head into this afternoon. But still, the market kind of interprets things the way they want. We see all kinds of reactions in both directions. And with options expiring this week, I think that just adds a lot of potential volatility to what already is probably going to be a volatile week. We do have our major indices up at or near all-time highs. I wouldn't be surprised because of after we looked at Max Pain last night, I wouldn't be surprised to see a little bit of weakness throughout the balance of the week. I think that's something that we're going to have to really keep a close eye on. But my gut feeling is that we're probably going to see maybe weakness as we finish out this week and maybe even heading into early part of next week. As I mentioned during the event last night, the worst day of the month historically is the Monday that follows option expiration Friday. So coming up on Monday, that would be the 21st. I think we got to be careful that day, and obviously we need to be careful as we head toward option expiration Friday. So we got a lot going on, a lot to keep track of here. Last time I looked at futures, which was just a little while ago, we were pretty flat. Maybe a little bifurcated with a little bit of weakness on the Dow and maybe just a little bit of strength on the NASDAQ, and the S&P was pretty flat. But I can give you the latest. The QQQ right now is up just a little bit more than 0.1%. The Diamond, the DIA, which tracks the Dow Jones Industrial Average, currently is down about 0.1%. And the Spider is currently at, get the latest there, flat. So nothing's really changed. So things have been pretty quiet this morning. We'll get in, take a look at Oracle's earnings report and the reaction there, which was a little bit to the downside. I had just spoken about Oracle here in the past couple of days and mentioned that I think, we might see perhaps Oracle go back down to the 50-day, that a lot was probably priced in. And that's exactly what we're seeing this morning. The stock is actually down, trading just a little bit below its 50-day. We'll see how it, where it goes from here. My guess is after the gap down, we'll probably see strength. But again, that's just my opinion. I would watch maybe a key support level around 75, but we'll look at all that in just a few minutes. Anyway, just wanted to kind of bring you up to date there. Let's take a look at, before we get into things, let me just take everyone over to Earnings Beats. I do want to mention we had a lot of new members that were interested in checking out our service. So they wanted to know if we could have maybe an extension of our spring special, which has been running the last 2 weeks and was scheduled to end yesterday. Well, we have extended that one more day. So you've got this one final day today to consider an annual membership. I think it's a great deal. We do offer 2 bonus months. So instead of 12 months, you get 14 at that same annual rate of $9.97. And that is 52% off of the regular monthly rate of $147. So I don't know what it comes out to, $72, $72 a month, something like that. But the annual deal is so much better than the monthly deal. So if you are a monthly subscriber, or you're on a trial, or your annual membership is coming up for renewal, this will be the best time of the year to extend using our spring special. So just want to make sure everybody's aware of that. It will end today. We extended one day, but this is it. So midnight tonight, it will be gone. All right, moving on. Let's take a look at what happened in the market on Tuesday. The Dow Jones Industrial Average down 94, the S&P down 8, NASDAQ down 101 on a relative basis. You can see we were up getting close to that breakout level, rolled back over. Certainly seems to me like maybe we're at a point where we could use a 20-day test on the NASDAQ. The PPO has been strengthening, so momentum is good, but going into option expiration Friday, and then of course the couple of days after option expiration tends to be a little weak as well. So I just think this is the time where I would say it's more likely than not that we will see a pullback. No guarantees. I mean, I've seen us go into option expiration week and the market just take off. So it's certainly a possibility. I'm just talking about probabilities. And when I look at the market right here, it just seems like maybe we'll see a little bit more selling in the near term. Mid caps down a couple points. Small caps were up 3. So there's your winner on the session for Tuesday. Small caps came down, hit that 20-day, bounced beautifully off of it. Also, you can see that that prior breakout was at about 1375, which is where we tested before we bounced. So I think small caps look pretty good there bouncing. Energy continuing to perform well. That's good, both good news and bad news, because there are a lot of energy stocks that are heavily traded in options. So the fact that energy is leading us right now should tell us we want to be a little bit more cautious with those stocks as we head into option expiration Friday. Industrials had been down, but they did reverse a little bit. They are likely not to be in as bad a position heading into option expiration Friday, because the stocks in the industrials have been coming down for the first 2 weeks of June. Real estate, this one did have a rough day. This was the worst performing group on Tuesday, and I've been talking about it. It's got a negative divergence on the 60-minute chart. I just think this is a group that just needs to pause for a little bit. It's been very strong, but a move back down to test the 20 days, certainly not out of the realm of possibilities. Technology, also a weak day yesterday. You can see we got right up to resistance. If we're going to pull back, this is the area, and right on cue, technology pulled back. And a lot of technology stocks, because of this run, are deep in the money in terms of their the in the money call premium versus in the money put premium. So it behooves behooves market makers to drive many of these stocks lower over the next couple of days. So I wouldn't be surprised to see a little bit of weakness here in technology. And then communication services, same thing, moving up, printing a new high, and then yesterday looks like a bearish engulfing candle. That probably is going to mark a short-term top in communication services. So that was what happened yesterday, looking at the major indices in various sectors. And I think, we've still got a lot to try to digest. Yesterday, the economic reports that came out yesterday, I'll tell you, they were horrible. I was really surprised to see just one after another. I mean, we had the higher than expected PPI and core PPI. The May retail sales were horrible, and real retail stocks got hit yesterday. If we strip out the autos, retail sales were bad. They were actually supposed to rise for the month of May, but they ended up, I think they were down like full percentage point below expectation. I was looking for the numbers, but I don't think I have them right here in front of me. But then June Empire State Manufacturing Index came in at 22.5. May was 24.3, or actually, excuse me, the estimate for June was 22.5. I believe the number came in at 19. Again, I don't have the actual number sitting in front of me, but that was weak. The June Housing Market Index supposed to be 83. It came in at 81. I mean, it was just one thing after another. And then this morning, May housing starts and May building permits came in below expectations, and April got revised lower. So all I can say is, with all of this, I cannot imagine the Fed is going to grow more. I think personally they're going to stay very dovish. I think they're going to be very accommodative. If they're not, then you've got to chalk it up to the inflation side. And that probably is going to be the most important part of what they announced this afternoon, is what do they say about inflation? Because we just had 2 more huge, hot inflation numbers come out, with the CPI last Thursday, PPI yesterday. We're now seeing inflation running at 5% year over year on the consumer side, And then on the producer side, 6%. I mean, these are levels we haven't seen in a long time. So what is the Fed going to talk about when it comes to inflation? I believe they're going to stick to their guns, and I believe they're going to say it's transitory. They may say, hey, we're going to keep watching it. That might spook the market. Who knows? But it's everything they say, any word that gets changed from last month, that's what the market's really going to be hinged on as we go into the afternoon. So it could be a volatile session after 2 o'clock, depending on what the Fed says, and more importantly, how the market reacts to it. Currently, we are back down again today. The 10-year Treasury yield is at 1.485. So it is down about 1.5 basis points. And that was after that week. Housing starts, building permits number came out this morning. It just looks like now we're starting to trend lower in the 10-year Treasury yield. And I say it with surprise because I'm surprised. I did not think we would be going back down below 1.5%. I'm really surprised that we went to 145, back to 150, and now it looks like we're starting to roll back over again. So what does the Fed say this afternoon? What happens to the bond market? That will give us some clues as to what areas of the stock market we want to pay attention to. All right, let's move on and talking technically. So what I wanted to do here in talking technically, and after options have expired in prior months, I've gone back like the week after, and I've pointed out many times that groups that have high scooter scores heading into option expiration week tend to be underperformers, and the ones that have been beaten up a little bit more tend to be the better performers as you go into option expiration week. And it's just because of the in the money call premium or put premium, that influence, I think, helps to direct prices in the very near term. And it's one of the reasons why the stock market struggles from now through about the 20, well, not quite yet. Today's the 16th, but the typical month from the 19th to the 25th is when we see weakness. And I think a lot of that has to do with the fact that we have options expiring right around that time. Options expiration Friday is always going to be between the 15th and the 21st of the month. That's when the third Friday will fall. So you know that's when options expire, and it's usually into option expiration and then the few days after. That's when the market tends to get hit. And the question I always get is, why would it have an impact next week? If they expire on Friday, it should be over. Well, it's not, because if you have a call that's in the money and you exercise your option to buy the stock at your strike price, the market maker takes the other side of the trade. So at Friday, at the close, I could buy a stock based on options. The market maker shorts it, has to take the other side of the trade. So going into next week, what direction do you think the market maker wants the stock to go? It's going to want it to go down. So there's a continuation of this option expiration trade into the following week. So you need to be aware of that. And I think looking at the scooters, it's just a ballpark, like, okay, energy's been strong, real estate's been strong, financial's been strong. This is probably where we're going to find a lot of these strong groups. But also, technology, I showed you on the chart just a couple of minutes ago, it's been strong of late. Communication services just reversed off of a new all-time high. So even though the scooters are a little bit lower, you still have pockets of strength within these other sectors. But then as you get down toward the bottom, you're probably going to start to see more and more weak areas. You can do this not only for the sectors, but you can also do the industry summary the same way. So let me drag this over here. All right, so industry summary, I've got these sorted lowest scooter to highest. So for instance, consumer discretionary, which was down near the bottom, look at what's been really weak within consumer discretionary. Footwear, specialized consumer services, specialty retailers, autos, toys. These are areas that are more likely than not going to have stocks within their index that have been beaten up of late and may actually get a bounce into option expiration Friday. The ones that you see at the bottom, like here on communication services, internet stocks have been strong. You might want to be careful with some of those internet stocks. Or the tires group within consumer discretionary, very strong. And you can just look at each one of these groups. Here's energy. Look at all the energy scooters. Coal, 99.9. Exploration and production, 96. These are areas of the market that I think could struggle as we get toward the end of the week. Although crude oil prices continue rising, and if we talked about that measurement, I think crude oil goes to $77 a barrel. And yesterday when I looked, we were at 72. I haven't even looked at it this morning. Let me see. I'll tell you what crude oil is doing today. Right now it's down 2 cents. It's at 72.10 per barrel. So I think it eventually goes to 77 over the summer. Wouldn't be surprised here over the next couple months for it to hit $77 a barrel. But in the short term, I would just be careful with the group because many of these stocks have either broken out to 52-week highs, all-time highs maybe, probably not. Most of the energy stocks 52-week highs, or they're close to 52-week highs. And if they have a lot of options that are traded on those stocks, you just want to be careful. All right, let's keep moving on here. So let's see what I had next. Oh, I wanted to take a look at a couple of industry groups. So home construction, we've had some not so great reports out. Yesterday, we had that housing market index, which came up short. Today, it's May housing starts, May building permits, both came in below expectations. Well below expectations, I should add. And April's numbers for both housing starts and building permits were revised lower. And you can see what's going on here. Now, this is a group that could be heavily influenced by what the Fed has to say later today, because obviously that's going to have a direct impact on interest rates. And then, of course, interest rates are a big component of home construction. So what is going to happen here? That remains to be seen. What I can say is that off of that reversing candle at the top on May 10th, we went down to the 50. We held there, bounced, but failed at the 20, went to a new low, came back up to this prior high, could not get through, and we've broken to a new low. We have a downtrend in play now on the daily chart. So I think this is an industry group that we'll want to watch really closely, especially into the Fed announcement today and then options expiration the rest of the week. One other thing on home builders I want you to be aware of, I pulled up seasonality for the last 12 years. And if you look across the last 12 years, of course, 12 years ago was 2009. That's when the market bottomed. That's why I picked 12 years. So during this entire advance, you look at home builders and they have averaged a gain in 11 of 12 months. The 1 month that they have averaged losing ground throughout this 12-year stretch of higher prices, the one bad month has been June. And we go back to this chart and you can kind of see since the start of June, things have just been moving lower. So history isn't my primary indicator, but I do like to follow history. Next up, I want to talk about the commercial vehicles and trucks. So here, this is a group that I've been talking about recently. You've probably heard me talk about Deere and maybe Caterpillar. They are not looking very good right now. And this is a group that went straight up. I want you to think about how far renewable energy went or how far automobiles went during 2020 and how much they've struggled since. And then I want you to think about the commercial vehicles and trucks, because this has been very similar. You know, we hit this top back in March. We had one more high, but look at the whole PPO. I mean, it just kept weakening and weakening. And then we printed that top, and very similar to the home builders on May 10th, topping, moving down, hitting the 50-day, bouncing once, moving back down. You see how it's starting to print lower lows and lower highs, the 20s below the 50. Now, all of a sudden, we've got the PPO in negative territory. This has been a great area for the last year or more, really since the pandemic hit. But it looks to me like it's rolling over, and I would treat it very similar to how we treated renewable energy a few months ago. It was strong, but it had gone up so much. When it started to show weakness, you just want to be away from that area. I think you've got to let this group catch its breath for a while. I don't know that it's going to go straight down for a period of time, but it's probably at a minimum going to consolidate. Now, the fact that it's sold off so hard recently, and we've got 2 or 3 days left of, prior to option expiration, I think some of the stocks in this area maybe will see a bounce. We do have that 20-day moving average that's going to probably provide some pretty hefty resistance on any move back to the upside. But you want to watch this area for a possible bounce, and that would be about it. So if I pull up a stock like Caterpillar, you can see Caterpillar, and I'll pull up the relative chart so you can get a sense of how it's performing. I mean, look at the AD line. Look at the volume pickup and the huge filled candles. That combination will send the AD line down very rapidly, and that's what's happened. So Caterpillar, to start June, was up near 52-week high on its AD line. Now it's closer to the bottom than it is the top after all this selling. But again, short term, could we see a bounce? Yeah, I think we probably will see a bounce heading into option expiration Friday. And then after that, I'd be really careful with this stock and with this group. You can see Caterpillar was a leader in the space, but here in June, it's kind of fallen apart. And the other one that I think is worth taking a look at as well is Deere. And so Deere, look at the AD line on Deere, close to a 52-week low now. Deere was actually struggling on its AD line even when it set this new high back on May the 10th. And then it's really just kind of fallen apart here. On a relative basis, Deere topped about a month and a half, 2 months ago, rolling over, same versus the S&P 500. So this is an area, personally, I would just kind of stay away from. I'm not a big fan of this group at this point. After posting great numbers for a while, I think that, again, we just need to let this group settle down here for a little bit. On a seasonal pattern, I thought I'd bring this one up as well. These last 12 years, look at June. June's been flat. Once again, outside of August, June is the only other month. Oh, wait, May was a bad month. Okay, so this one is a little bit more volatile, but June's the third worst month of the year for this space. And look what happens when we get into the fourth quarter. November, this group's been up every year throughout this entire advance since 2009. So, and November is a strong month for the market overall, but you can see that strength really building as we move into the fall. So be careful with this group over the summer because it does look like we could see some additional selling. All right, let's move on and take a look at Oracle, which reported earnings. You look at the bottom line, $1.54 versus $1.31. I think they also beat on their revenues. So this is a company that I had mentioned. I thought they'd report strong numbers. I think they did. And the AD line's been strong. So we're looking at a gap down potentially of 5%. We can take a quick look and see where we are right now on Oracle. Yeah, 5.19%, 77.40. So let's go back and look at 77.40. 77.40, so that's going to be just below the 50-day. I want to see how this stock finishes. The AD line's been strengthening, so that would suggest to me that it's probably going to be bought after the open, after we get this gap down. But if we break the 50 and continue selling off, that would obviously be a much more bearish development on the chart. So yeah, the opening bell is going to be weak for Oracle, but what does it do after the opening bell? I think that's much more critical than what it's doing right now. Do we rebound or do we continue to sell? With the report and the sell-off at the open, market makers are going to be on the long side, most likely at the open. So that's why I would expect to see that hollow candle. If it gaps down and continues moving lower, that just adds to that bearishness. So let's see what Oracle does after the opening bell. Two other companies that reported yesterday after the bell. One was H&R Block, HRB. And they also are down after hours despite beating their bottom line, 516 versus 511. They're down 2.5%. Now, I would say again on this one, the breakout was right around 24. There's your 50-day. I mean, it's going to open probably about, 60 cents down, 2.5%. So probably down around 24.65, something like that is where we're looking. And I actually like the stock on the 50-day test, anything back down close to around 24. And with a beat on their bottom line, I don't know, probably is a little overblown reaction to the downside. Next up is a Lazy Boy. They reported 87 cents versus 75. An easy beat on the bottom line. Another stock that's down 4% after hours or this morning when I looked. So that would take it down to about $1.60, maybe $1.70, which would then take it down to about 40.50. So right in here, right about all these lows. So maybe another big hollow candle and we hold. If we fail to hold 40, I think that opens up the lows down here around 36. So I'd be a little less bear or a little less bullish if it were to break below that 40 level. But if it can open above 40 and start to show that hollow candle, that could be a short-term bottom in for Lazy Boy. So we'll want to see how that reacts as well. All right, let's move on to the three you must see. I'll give you a fourth one because we were just talking about home builders. So I wanted to start with Lennar. Lennar, just like the home builders, has rolled over. You can see it's really struggling. That 20-day is now acting as resistance. It's below the 50-day. This just doesn't look very good to me. I want to see what that PPO looks like. Yeah, see at the high here. Look at that reversing candle at the top on May 10th. Higher prices. Look at the PPO. Negative. Now it can be a short-term, short-term continuation pattern that forms, and we eventually break out. Or this could be we could be rolling over and starting a downtrend. What I would look for with Lennar, especially with the Fed and options expiration this week, can we get back through the 20-day? If we could get back up to 100, that to me would maybe start to signal left shoulder, neckline, head, neckline. Or if it starts moving back to the upside, it could be a cup. If we keep failing at the 20-day and moving to new lows, that is obviously the much more bearish scenario. So if we do get a bounce and we do test that 20-day, what happens from there? That's going to be the first clue, not only on Lennar, but on the home building group in general. The other three stocks I want to give you for the three you must see, two of them are in the energy area. One is Diamondback Energy FANG. This is a stock I think that continues to look very strong, making a breakout. Volume picked up yesterday. I don't think they're heavily traded in options. You could go to cboe.com and check on that. But I'd be more inclined to hold on to energy stocks that maybe don't have that same issue with options. If it's not heavily traded, there wouldn't be a whole lot of money at stake. But overall, I like the pattern here. So even if it were to pull back, that 20-day moving average, I think, looks really strong for Diamondback or FANG, F-A-N-G. And the other one I wanted to mention breaking out was ExxonMobil. So ExxonMobil here making a new high. I see pretty much equal highs. I mean, they're going up slightly. So it's not a perfect ascending triangle, but you do have roughly equal highs, rising lows, and then there's that breakout on increasing volume. I would check on the options here. Because it's been consolidating so long, it hasn't made a huge move. See, like February and March, if we'd had made an extended move like this, I'd be more concerned because there'd be a lot more in the money call options. But we are making this breakout. Don't be shocked if we get a pullback to the 20-day on ExxonMobil. And then the last one I have is Humana. This is in the healthcare area. It's been going down for a while, but it reached this support down around 412 to 415. Beautiful bounce off of it. Again, this is one I haven't looked at in terms of options, but my guess is after going down for 4 or 5 weeks, that it probably is primed for a little bit of a run here into option expiration Friday. If you see it go through the 20-day intraday and fail and come back down below, I would be very careful. And you can look back 3 weeks and you see that exact scenario. We go down through the 20, we come back up, we have a false break above the 20, fail, and then you can see that selling resume. So that's what you want to be on the lookout for here on Humana. If it breaks above the 20 but can't hold it and comes back down, I would be looking for another test of these lows and possibly even a short-term breakdown. So that would be something to keep in mind. All right, wow, we're done, and it's 30 seconds before 9:30. So this is a first for me here at Earnings Beats being done before we actually finish the show. But I do want to thank all of you for tuning in. I hope you enjoyed the session last night. Let me know, right, to support@earningsbeats.com. The Max Payne webinar. I'd love to get some feedback if you haven't already given us some, and let us know what you think of those. And we're going to be watching that those stocks into option expiration Friday, along with, of course, the Fed this afternoon. 2 p.m. will be that announcement. Everybody have a great day. Take care. Happy trading. I'll be back at with Trading Places Live tomorrow over at Stock Charts TV. The recorded version will begin at 9 a.m. Eastern tomorrow morning. Everybody have a great day. Happy trading.